Good morning. It's Tuesday, May 20th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So a lot of questions remain in these markets here, and a lot of questions I've been asking myself, specifically around the gold market. Can gold hold above 3,200 with 4% two-year yields? Or is that more of a risk asset headwind, such as in the crypto market, in the equity markets, with the consumer? And can it become a tailwind for the gold market? So I think there's a lot of waiting. And one of the things that many investors are waiting for is the clock is ticking on the 90-day relief on tariffs, which are due to expire in early August. So if you were working closely with me and you had put options in the S&P 500, a lot of those people had rolled those over to September. Again, not a recommendation out to the public, just an observation of some of the plays that we've been doing over here at Blue Line Futures. So let's take a check on the top market moving headlines here, some of the overnight price action, some of the markets at a glance. So you look at the S&P 500 under just a little bit of pressure, 59.66. High in the overnight session, 59.93.50. I think that is a critical level on the overnight session here. And if a break above that, we could see an extension upwards through that 6,000 mark, where many stop losses will probably be hit from the short sellers. It'll spark another wave of short covering here, and we'll probably float up to 60.15 to 60.20. Now looking on the downside, critical level of support, I think, is 59.30 on the S&P 500, where we start to sell off into that level. You may see some of the traders come back into the market. So stock futures, they are lower after that swift turnaround on Monday. And the buy the dip mentality is really there and alive with not only the retail investor, but with the CTAs and the institutional clients, which are significantly underweighted on long U.S. equities here and seemingly chasing this market here. So you see the S&P 500, it has extended its winning streak to 6 straight days here. So with the market turning around here today, we'll see with that 7-day count here if this is the day that breaks that market down a bit. Now markets are focused on a 10-year yield, which did come off as the session progressed on, and I think that was really gave the fuel to the fire here to the equity markets yesterday, and then it kind of pulled off some of the momentum on the upside in the gold market and into the 10-year treasury notes. So looking at the economic data coming out today, not a lot of data, none at all, mostly central bankers speaking, and you have a slate of Fed speakers that are going to be closely watched today as they look for cues on and clues on the outlook of the economy, some commentary on the Moody's downgrade. Two of the Fed officials suggested on Monday that policymakers are not ready to move on interest rates long before September. So they're really looking at that back half of the year, September, December, when they would start to look to cut rates, because they feel like the impacts of the tariffs have not weighed in on the economy. And Jamie Dimon also said the same thing yesterday. So we're going to have Fed speakers at 9 a.m., at 9:30, 1 p.m., 5 p.m. So all throughout the day, just tons of Fed speakers coming out there. Now looking at the precious metals markets, you have gold futures here up about $4.50, 32.37. So you look at the overnight range, 32.0740 up to 32.4170. So it's the risk on in the U.S. equity markets that is pushing that pressure on the gold market as the rotation occurs here. But gold prices, they did steady around that 32.30 yesterday because of some safe haven demand from the Moody's downgrade here. But of course that faded throughout the session. So traders are really going to focus on the Federal Reserve's path and the easing trade tensions here at the moment. We did have that turnaround in the gold market overnight, though, and what turned that around was China imported, and this was data that they released, the most gold in nearly a year last month. So, and this comes despite the record prices. Heightened demand for the precious metal prompted the central bank to ease some of the restrictions on the bullion inflows. So total gold imports for the country reached 127.5 metric tons. That reached an 11-month high here. And it's about the direction of how they're buying here, and then the percentage of the gains on a month over month. It's the rate of change is what propelled the gold prices higher. But we'll want to look at yesterday's high here as a critical level, because gold futures have really struggled between the 32.50 on to the 32.65 mark. I think a break above that could retest the 3300 level, and we will look at that as the next line of resistance. So today's focus again is going to be those Federal Reserve officials suggesting that policymakers may not be ready to lower interest rates before September, and that could weigh in on the gold market. And with high yields I think that it makes gold a little bit less attractive at the moment here. So we're going to look at ETF flows. We want to look at Chinese speculative demand, central bank buying, trade tensions, the technical levels, and then the Fed rate cut probability. So those are kind of like your 5 things you want to watch in the gold market. Now you look at the industrial metals here, and you look at the only metal that's lower here on the session. It was aluminum yesterday. It's copper here today, going back down, retesting that kind of pocket support. So if you get the chart pack, kind of that 455 level, we've got down to 450, 855. So a lot of the dip buyers coming into the copper market at that critical level of support here, playing an upward move back up to about 472. So it was data from China showed that copper output had climbed to a monthly record high in April, and the production for refined copper was up about 9% from a year earlier to 1.25 million tons. So you're seeing a bit of a disconnect in as far as demand is concerned, as far as supply is being produced, and where things are traveling. But I really think that the support level on that copper market, right around about the 455 mark. Silver futures getting a little bit more of a bid here in this overnight session. And if you get the chart pack again, you could see on silver, there is, if you connect the April high and you go down through that May high, that spike up that resulted in a big drop, you could see that there's a trend line that goes down. If we break above that, I think we could snap back higher and start to move to that $33, $33.50. So as far as the metals are concerned, I'm much more constructively bullish, in my opinion, on the silver market, on the copper market, than the gold market at this particular moment. Now, one market that's kind of slipping by on us here is the platinum market, back over the 1,000 mark, trading at 1,015. That's up $9. And the reason is that Chinese jewelers and investors, they imported 11.5 tons here of platinum in April. That was the most in a year, and it's due to the relative stability here that we're seeing here in the price of platinum versus something like gold. So you get this shift by the jewelry demand where people are starting to look to switch to other products that are cheaper here, and this is where you're going to see things like platinum start to outperform that gold market in that one aspect. Remember, when you're trading things like silver, we talk about, hey, there's the bullion aspect, there's the ETF aspect, which is your precious metals, then you've got your jewelry aspect, you've got your industrial and things like that. Those are some areas that you have to watch when you are trading that silver market. You go into something like the gold market, it's mainly that central bank buying, it's mainly people just holding on to that specific asset. You get into platinum, platinum's going to have the automotive and also the jewelry aspect of it. And what's happening is that jewelry aspect of platinum is robbing from the gold market. So you're starting to see that growing demand for platinum, and it's already starting to threaten the above ground stocks and things like that. And that's where platinum futures break out to the upside. You get the chart pack. We identified the key levels of support. And I also did say that the upside target, in my opinion, would be closer to that downward trend line just over the 1,000 mark. Now you look at the ETF flows, exchange traded funds, they cut 187,000 troy ounces of gold. They also cut 1.7 million ounces of silver from the previous trading sessions. You're seeing 4 straight days of declines in the silver market, 3 straight days of declines in the gold market, and in the silver, you got the longest losing streak since April 4th. You look at the year-to-date percentage change, gold up 6.1%. That's a 0.2% decrease. You go to the silver market, up 2.4%. That's a 0.2% decrease. Gold-silver ratio sits at 99-1. Critical level is going to be 97-1. That's the April 23rd low. You go to crude oil market, there's 2 driving factors in there. You've got Trump and you've got the Ukraine and Russia. You're getting discussions about immediately ending the war. That's taking prices off a bit. Then you get this back and forth rhetoric with Iran here and the negotiations around the country's nuclear program. And they're saying that Iran is basically saying that the U.S. is being unrealistic on what they are looking at doing. If a deal is made, you could see about 300 to 400,000 barrels of additional supply come out in the market. So it's a lot of these things that are taking this back and forth section. On the chart pack, I identified 63 to 65 as your critical level of resistance, and then also your support levels. outside market, you look at the wheat futures jumping up here again, and they jump by the most in more than 2 weeks. You got dry conditions in parts of the US and China, and it's forcing traders to buy back a lot of those short positions. You have record shorts here. You look at the USDA, or I'm sorry, the CFTC data here, it shows that money managers have the biggest ever net short position on hard red winter wheat futures, as well as a massive bearish bet in the Chicago soft red winter wheat. So what we're looking at here is the upside on a short covering rally in the wheat market. Again, not a recommendation, observation into my playbook here. You guys got any questions, give me a call, shoot an email to info@bluelionfutures.com. Remember, futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.